Now the clock hits 8:30 and 311,000 is the number we get. 311,000 jobs added to the U.S. economy in the month of February, 3.6%. So the unemployment rate actually ticking higher. Remember, they come from two different surveys here, 3.6%. And then average hourly earnings rising less than estimated, 0.2%. That means on a year-over-year basis, it goes up 4.6%. A couple other things I would point out within the report: manufacturing payrolls pulling back by 4,000. Not necessarily a surprise there. We have seen more weakness in the manufacturing sector. The labor force participation rate going higher by just 0.1%, 62.5%. That's something that economists have been watching to potentially go higher here. So those are some of the initial headline numbers I'm looking at. But again, 311,000, considerably stronger than estimated, but of course not as strong as last month. And speaking of last month, there was a revision lower in the January payroll number, but not much lower, 504,000 versus the 517,000 first reported. So still seeing, on balance, Ines, strength here in these numbers.
Yeah, and just taking a look at some of the sectors and where we're at, leisure and hospitality added 105,000 jobs in February. You have employment in retail trade, which rose by 50,000 in February, reflecting a gain in general merchandise retailers. Government employment increased by 46,000 in February, about the same as the average monthly gain of 44,000 over the prior 6 months. You're looking at employment in professional and business services continue to trend up in February, up 45,000 with a gain of 12,000 in management, scientific and technical consulting services. Healthcare added 44,000 jobs in February compared with the average monthly increase of 54,000 over the prior 6 months. Construction employment grew by 24,000 in February, in line with the average monthly growth of 20,000 over the prior 6 months. Employment in social assistance rose by 19,000 in February. Transportation and warehousing lost 22,000 jobs in February. The information industry lost 25,000 jobs in February.
Yeah, and so not seeing that crack in construction yet, seeing continued losses in information given those layoffs that we've had. So it feels to me here like, yes, we have a hot headline number continuing. And by the way, when we look at the January number and why it was so hot, there's a lot of theorizing around that. Part of it has to do with weather. Part of it has to do with the increase in Social Security benefits, perhaps fueling some of, well, that's fueling spending, but also maybe just fueling the overall good feelings in the economy. I don't know. And then, but if you look at this number with the 311,000 headline, and average hourly earnings rising less than estimated, that might not be such a terrible scenario, right? If you do have, because I think that the Fed is very closely watching that earnings number, even as they're also watching the overall earnings job growth number.
Yeah, that's right. The average hourly earnings rose by 8 cents, 0.2%, and the street had been estimating a rise of 0.3%. So not as hot as expected.